Good day, Junior Techies. I'm Mrs. Brumacombe, and we are going to look at Chapter 5, Activity 2. The following information was extracted from the accounting records of Blueberry Limited. The financial year ends 28 February each year. Question 2.1, calculate the net profit after tax, and 2.2, prepare the following notes to the balance sheet. A reminder, when we looked at Activity 1, you had to complete the income statement by looking at what is our income and expenses for this accounting period, which is equivalent to 12 months. When they ask you to calculate the net profit after tax, it means that they've already done that, but it was done incorrectly. So now we need to make changes. So we only care about those changes. I suggest use this T account as a tool when completing this type of question. Why? If I look at the net profit, which was calculated incorrectly, if our income increases, it will have a positive effect on the net profit. If our income decreases, it will have a negative effect. If we look at our expenses, if our expense increase, it has a negative effect, but if our expense decrease, it will have a positive effect. So this is like completing the accounting equation where we look at assets equals owner's equity plus liabilities, where we say all income, all expenses has an effect on the owner's equity. When you start your test and exam, look at the answer booklet. Look at what is required of you. Here you can see you are expected to complete the incorrect net profit before tax, trade and other receivables, cash and cash equivalents, ordinary share capital, retained income, and trade and other payables. We have to use the same information, the same adjustments to complete this. So how do I approach this question? We start by completing all the information that we've got, taking it to it where it's supposed to go. From the balances and totals in the balance sheet account section and in the nominal account section. Like we've done in Activity 1, make sure that you tick off on your question paper and highlight whatever still needs to be taken or used in this question. If you look at SARS income tax, please remember this is always your provisional tax payment. So I still need to calculate, do we owe SARS or does SARS owes us? And this can either be in trade and other receivables or trade and other payables. If we look at dividends on ordinary shares, this represents the interim dividends that was paid. This is why we have taken it to dividends on ordinary shares in my retained income note as interim dividend, and the amount is 140,000. Know your formats. This is the easy marks to get, knowing what goes where. If we look at the first adjustment, the fixed deposit was increased by 65,000 on 31 October 2020. This has been recorded. Interest is not capitalized. Outstanding interest needs to be accounted for. This means that we need to calculate what is the outstanding interest by looking at what was our interest supposed to be this accounting period. Because interest is not capitalized, it means that the outstanding interest will need to go to trade and other receivables as accrued income. So when we look at the calculation, it's important to understand the following. From the pre-adjustment trial balance, The total fixed deposit is 700,000. I cannot calculate interest on 700,000 for 12 months at 9% because the investment, the fixed deposit, was increased by 65,000. This means that my balance from the beginning of the accounting period was different. So how do I calculate the interest? Very important to notice that this has been recorded. So because this has been recorded, the balance from the pre-adjustment trial balance is after that investment was made. So to calculate the balance in the beginning, we need to take 700,000 minus 65,000 equals the balance in the beginning. So interest must now be calculated for 8 months on 635,000 and for 4 months on 700,000. So if we open up a T account, the interest on the fixed deposit from the pre-adjustment trial balance, we had a total of 53,850. Our total interest for this accounting period is supposed to be 59,100. This means the difference, 5,250, is still outstanding. Now, when completing this question, calculate the net profit after tax by correcting the net profit before tax. It means that I don't care about the total interest for this accounting period. We are only going to show the adjustment amount, 5,250. That will appear with no bracket. Why? Because it's still outstanding, our income will increase, it will have a positive effect on the net profit. In trade and other receivables, we are going to show accrued income, 5,250. In our next adjustment, during the year, extensions were made to the land and buildings. An invoice was received. The full amount was debited to repairs. This means we need to adjust the repairs by simply taking out the materials for the extension and the labor. And because we're taking it out, it means that our expense will decrease. If our expense decrease, it will have a positive effect on the owner's equity. So the total that must be taken out is 80,000. So in the incorrect net profit before tax, we will show repairs, 80,000, no brackets, because it has a positive effect on the net profit. Salaries and wages were paid in full. An employee who had resigned at the end of February 2021 was not removed from the salaries journal. His information is as follows. So the gross salary is 38,000. The deductions is for pay as you earn and UIF, and then we contribute towards the UIF. According to the bank statement, the employer paid back the salary on 28 February 2021, but no entry was made for this. So there's a number of things that needs to happen here. First of all, we need to take out the gross salary. So to take that out, we are going to show salaries, 38,000, no brackets. Because our expense decrease, it will have a positive effect. UIF contributions, 1% of 38,000 equals 380. Again, no brackets. Because we need to take it out, our expense will decrease. It will have a positive effect. The gross salary is equal to 38,000. Pay as you earn is 25% of the gross salary, which equals 9,500, and the UIF is 1% on 38,000 equals 380. So my net salary is equal to 28,120. So where do I take this? The net salary, the employer paid back the money, and this was not recorded, which means we need to take it to our bank. We've received money, therefore plus 28,120. We also need to make adjustments to the SARS pay-as-you-earn, minus 9,500, and UIF, it's always the deduction and the contribution. We're minusing it because we need to take this out of our books. Interest owed on the mortgage loan at 12% per annum has not been recorded for February 2021. It means it's still outstanding. The interest is charged to the mortgage loan account, which means it's added to the loan account. During the next year, 42,000 will be repaid on the mortgage loan. That 42,000, which is paid in the next financial year, must go to current portion on loan, or another word for that is short-term loan, which forms part of trade and other payables, or it can appear on the face of the balance sheet. In this question, they didn't ask you to complete the balance sheet, the face of the balance sheet. It means this needs to go to trade and other payables. To calculate the interest, we're going to take the amount from the pre-adjustment trial balance, 400,000, times 12% times 1/12. 1 month is outstanding. In my question 2.1, calculating the correct net profit, we're going to show 4,000 in brackets. Why? Because our expense increase, it will have a negative effect on the net profit. Depreciation is calculated as follows. Vehicles, 20% on cost. Take note that vehicles have already been used for 5 years. Depreciation on equipment amounted to 23,205 for the year. Take note, it's been used for 5 years. That should give you an indication when you're calculating the depreciation. Always check, if I calculate the depreciation for this accounting period, will that exceed the cost? The book value at the end of the year can never be a negative or a zero. So if we calculate the depreciation now, we have to calculate getting the book value, cost minus accumulate. If my book value at the end of the accounting period is equal to 1, it means that my depreciation for this year is 232,499. To show my depreciation, we are going to add what we've just calculated plus the depreciation given for equipment, and it must be shown in brackets. Why? Because our expense increase, it will have a negative effect on the net profit. Director's fee for February 2021 is still outstanding. The directors received a 20% increase on the 1st of November 2020. If director's fees is still outstanding, it means we need to take that to trade and other payables as accrued expense. Calculating the director's fees. I cannot take the total from the pre-adjustment trial balance and divide it by 11. Why? Because the directors received a 20% increase on the 1st of November. Looking at our calculations, this means for 3 months, the directors received 100 plus 20%, which is equal to 120%. And for 8 months, they've received an amount at 100%. So I've got two options to calculate this. Option 1 provides you with the amount before the increase, which means I still need to calculate after the increase. If we look at option 2, we can get the answer directly what we're looking for. And what is it that we're looking for? We're looking for the director's fees outstanding for February, which is after the increase. Because director's fees is still outstanding and it needs to be added to our expense for this accounting period, that means it will have a negative effect on the net profit. In trade and other payables, we are going to show accrued expense 66,000. Make sure that these two totals correspond. A debtor owing 2,600 is insolvent. A dividend of 20 cents in the rand was received. The rest must be written off as irrecoverable. No entries was made or were made of these transactions. This means that I need to open up trade and other receivables, and we need to adjust the incorrect net profit before tax. We would also need to show the amount that we've received in the cash and cash equivalents. If we look at our calculation, the total debt is 2,600. We've received 20 cents, so this means for every 1 rand or 100 cents outstanding, we've received 20 cents, which means 80 cents must be written off as bad debts. So to calculate the amount received, we are going to take 2,600 times 20 cents, and to calculate the amount that should be written off as bad debts, we can now either take 2,600 minus the amount received equals the amount to be written off, or we could have said 2,600 times 80 cents. To show the amount written off, bad debts is an expense. Because our expense increase, it will have a negative effect on the owner's equity. This is why it must be shown in brackets. The total to be written off is 2,600. You could have either said minus 2,080 minus the 520, or you could just say the 2,600. In my cash and cash equivalents, we've received 520. This is why we're going to add it to the amount from the pre-adjustment trial balance. Unused storerooms were sold during the year. A bank statement shows an electronic fund transfer made by Tshwane Municipality for 2,000 in respect of the deposit of water and electricity. This means that we've received money. If we've received money, we need to show it in our cash and cash equivalents, bank plus 2,000. Deposit for water and electricity forms part of trade and other receivables. Now we need to adjust that trade and other receivables deposit for water and electricity by subtracting the 2,000. In our next adjustment, provision for bad debts must be adjusted to 13,250. This goes to my trade and other receivables. We need to adjust it to 13,250. It must be shown in brackets. From the pre-adjustment trial balance, our provision for bad debts is 15,000. This means that we need to decrease the amount. That 1,750 must go now to calculating the correct net profit after tax provision for bad debt adjustment. Because the amount decreased, it means that it will have a income positive effect on the owner's equity. As soon as it decreases, it's an income, the provision for bad debt adjustment. As soon as we increase the amount, that will be an expense. We can now calculate the net profit before tax by taking the incorrect net profit before tax and plus and minusing all those amounts, and that equals the net profit before tax. To calculate the net profit after tax, we take the net profit before tax minus the income tax equals the net profit after tax. But if you look at the adjustments, income tax is to be calculated at 30% of the net profit. So I could have also used that percentage. Because the income tax was given, we could have calculated the net profit before tax by taking the income tax amount times 100 divided by 30. We could also calculate the net profit after tax by taking the income tax amount times 70 divided by 30. Remember now, the net profit after tax must go to the retained income note. If we look at SARS income tax, our provisional tax payment was $290,000. Our income tax for this year was given $246,000. This means that we've paid too much. SARS owes us. If SARS owes us, this will go into your trade and other receivables. Don't forget to show your calculation in brackets. We can now complete the trade and other receivables. We've done the adjustments. So the last step is by closing the brackets and calculating the final figures. So if we've closed the brackets, the total debtors control is $265,000 minus provision for bad debts equals the net trade debtors plus deposit for water and electricity plus accrued income plus SARS income tax equals the total $319,000. Completing ordinary share capital and the retained income note. The shareholders' capital. The company decided to repurchase 40,000 shares at 680 cents per share from the estate of a shareholder who passed away. So that's the total amount paid. A direct transfer was made from the savings account on 30 June 2020. This transaction was recorded. Then 300,000 additional shares were issued on 30 January 2021 at 600 cents per share to finance a new development project. No entries were made to record the transactions. These shareholders do not qualify for final dividends. Then a final dividend of 50 cents was recommended on 28 February 2021. Looking at our calculations, a suggestion: draw a timeline, open a T account, make sure that you get this 100% correct. If I look at the amount from the pre-adjustment trial balance, that is not going to be the balance in the beginning or the balance at the end. Why? The repurchase of the shares, that has been recorded, but the issuing of the new shares was not yet recorded. So if I look now at the amount from the pre-adjustment trial balance, this is the amount after the repurchase of the shares. So to calculate the number of shares in the beginning of the accounting period, we are going to take 760,000 opposite calculation. So now we need to plus 40,000 equals the 800,000. Very important. We need to calculate the average price. The ordinary share capital note is always at the average price. So to calculate the average price, we are going to take the 760,000 that is given to us and the 3,040,000 which is given from the pre-adjustment trial balance. We're going to divide that to get the average price. So my next step is to calculate the balance in the beginning. And this is where the ordinary share capital, the T account, does help. If I look at the balance brought down from the pre-adjustment trial balance, balance brought down means balance carried down. The repurchase of the shares at average price is 40,000 times 4, which is 160,000. So to calculate the balance in the beginning, we are going to add everything on the debit side, and that equals 3.2 million. Completing the note, 800,000 ordinary shares was issued at the beginning, and the total amount is 3.2 million. 40,000 shares were repurchased at an average price of 400 cents, and that equals 160,000. The repurchase of shares must be shown in brackets. Now we can look at the additional shares that was issued. 300,000 ordinary shares was issued at 600 cents, which equals 1.8 million. Because this has not yet been recorded, we need to add that to the cash and cash equivalent. We are going to receive 1.8 million. If we look at the retained income, do not forget the repurchase of shares is always at the amount above the average price. So show your calculations in brackets. 40,000 shares were repurchased, and if we take 680 cents, which is the total repurchase price, minus the average price, it equals R2.80 or 280 cents, and that equals the 112,000. We can now complete the ordinary share capital note. If I look at the balance at the end and we look at the number of shares, beginning minus the repurchase plus additions equals the end balance. The same as with the totals, beginning minus plus equals the balance at the end. Calculating the final dividends. If we look at the additional shares, these shareholders do not qualify for final dividends. To calculate the final dividends recommended, then we need to take the 760,000, which is before the additional shares were issued, times 50 cents. That equals the final dividends, which is recommended 380,000. Do not forget the final dividends recommended will also appear in your trade and other payables as shareholders for dividends 380,000. We can now complete the retained income note. Interim dividends plus final recommended equals the total dividends on ordinary shares. If we take the retained income in the beginning plus the net profit after tax minus the repurchase of shares minus the dividends on ordinary shares, it equals the retained income at the end of the year. We can also complete the cash and cash equivalents by closing all the brackets. So bank plus the savings account plus petty cash equals the total at the end. The same with trade and other payables. We can close all the brackets, creditors control plus SARS pay as you earn plus the UIF plus accrued expense plus current portion of loan plus the shareholders for dividends equals the total trade and other payables. If you look at all of the notes to the balance sheet, we've now completed it by completing question 2.1 and at the same time taking it to the relevant notes. We've now finished everything that we need to complete. Thank you very much. I hope you have a better understanding of how to calculate the net profit after tax if the incorrect net profit before tax is given to you, and how to at the same time use that information to complete the notes to the financial statements. I want to leave you with this quote: life has two rules, never quit, always remember rule number 1. In our next activity, activity 3, we again going to look at financial statements, but now we're also going to complete the face of the balance sheet. I hope you have a wonderful day.